Hey guys, Mike here. So, oh boy, what a day in the market, and boy, were we green, green, green. And I don't know if you know this, but there's one main reason that today happened. One main reason. Now, I'm going to give you 6 things that actually happened to help push us in the green. Okay, a couple of these we talked about in Sunday's video. If you saw it, right, we talked about watching the dollar, right? Watching what they think about rate cuts happening in March. Is that not going to happen anymore? And what certain stocks are probably going to be moved into. And when they get moved back into, watch out for the market to start heading back up. Now, does that mean this is going to continue? Remember, this channel, we keep things in perspective. As I said, was it either Saturday, Sunday, whenever the video was, I said we're going to take it one level at a time. Because, you know, whenever we start to drop, people go, oh, this is it. And I'm going, let's just see what happens, okay? And we talked about some stocks on Sunday. They were setting at key levels, okay? And so everything just kind of aligned up perfectly today for this enormous move up and a whole boatload of stocks. But the main reason this needed to happen was this right here. And it has to do with the S&P 500 return in the first 5 days versus the full year. And there's usually a great correlation to this. If the first 5 days are positive, normally that year is positive. There's only a few times you didn't see this. That was a dot-com bubble, obviously, right there. And, you know, when you look, though, that was another one. We were down in 05, but the market ended up slightly green for that year. So it's just a few instances where this happens, and normally it's during like a crash year or something, right? But for the most part, there's another one you can barely even see it. But for the most part, you can see, I mean, that's 21 years, and I see 4. So a high percentage that the market's going to end up green if the first 5 days end up green. Matter of fact, it's so positive that right here it says, one of the widely popular indicators is the first 5-day indicator, which basically states that if the first 5 days of the years are positive, there is around 82 to 83% probability the full year will also be positive. Specifically, they find that when the stock market ended the first 5-day period higher, the S&P 500 was positive 83% of the time for the full year with an average gain of 13.6%. And when we look at the chart, that's where we started the year, 2024, right? This is about 45 minutes to close as I'm just starting to record this, and we're above it. And when I look back, we're even higher than this now. So for 2024, we are green for the first 5 trading days, okay? That doesn't say anything in there that, oh, wait a minute, we gapped down from the 29th to the 2nd, so that has to count. It's talking about the 2024 calendar year. What are the first 5 days? And right now, that is green, people. And why did this happen? And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. Well, there's a few reasons, but I do want to say, as one of our members said, boy, manipulation is best, right? I mean, if you don't look at that and say, you got to be kidding me. On the 5th day, they decide to run this puppy up right here to get us to green for the first 5 days. Oh, yes, sir, they did. Right? Never forget that. Never forget that. I mean, that's an amazing thing of what this market can do. And of course, what happens, right? You end up sitting here, the dollar's doing what? Like we talked about yesterday, it's weak as heck, man. Absolutely weak as heck. So it's going down, and we'll go into some of these separately so I can show you the chart. All the yields are dropping. Oil got crushed on the Saudis cutting prices because they're worried about demand. So freaking out that market. And so that is a recipe. This is just a couple of the reasons you see the market's going up. But look at the dollar. I mean, the dollar, you got the 50 crossing over the 200 now. It's sitting on that trend line, just hugging it, trying to hope to God it can hold on right there. Again, that goes back to 2022, if I'm not mistaken. You know, and once that breaks, I definitely think you're going to see somewhere around the 100 area for sure. I'll be surprised if we don't. Again, I'll move this trend up just a little bit. As you can see, that's where we found support. Again, 3 times now, so it's bounced there. And so if it gets there, we'll see if it bounces again. Again, I don't know if this trend line is going to hold up. Actually, it goes back to 2021, excuse me. So, you know, I just think it's going to continue to go down for sure. And when you look at yields, I mean, here's the 10-year yield, which is obviously the most popular right here. And you can see it's the opposite. The 200, that trend line right there, which goes back to 2020, as we can see. That one right there is major resistance for it. And if it rejects up there, it starts heading lower. Well, guess what? that's going to be a boon for stocks, right? It loves it, right? 50's crossing the 100, the moving averages are turning over on the dollar and yields now. And of course, what happens, we talked about this, if they think rate cuts aren't going to happen in March, and all of a sudden the dollar is still weak, and the Mag 7 still holds such a huge amount of the S&P, well, all of a sudden, boy, they started piling in there. And when you're Mag 7, and this is like Mag 9 because I put in Netflix and AMD, or this green, oh boy, what a day it is. The momentum is so huge, you do not want to jump in front of that train. You will get ran over, okay? I know people all day were trying to short this and short it, but that's a brutal thing to do when you got these puppies, the big dogs, especially Apple and Microsoft, right? We talked about them Sunday, sitting on key moving averages, which we'll look at in just a second again. And then you got Nvidia just roaring, all-time highs again. I mean, this thing was on fire all day long. And what did that do? It drug up all the semiconductors, right? You saw AMD, all of them. It didn't matter which ones they were, whether they're hot garbage, don't matter. They all just went up. And this was the leading sector of the day right here. Why? Because Nvidia rolled out some new chips, supposedly, for laptops and all kinds of stuff. And so, you know, people are going, yay, AI, AI, AI. So another AI pump, right? Pumping this thing in, pumping this thing in. And then you saw, you know, IWM. Here's another one. What happened? As I told members in Discord, and you just look at it. It was the perfect deal here. It come down to September high right there, retrace down to the golden pocket Fibonacci level inside that fair value gap, which is the daily. If you pull it the weekly, you'll see it as well, and that's a high time frame deal right there. So it was a perfect time for a bounce, right? It got back above that trend line right there. So we'll see if this continues or not. Okay, we'll see if it continues, because regional banks weren't like super hot today, which is kind of interesting. I mean, small cap tech was, but again, this was due for a bounce. It was in the perfect spot for a bounce, the same as what? Apple. Bouncing off the 200 moving average. Again, it's Apple, right? Microsoft bouncing off the 50 moving average. Again, you get above 376.59 before it can start trying to go to all-time highs. That's going to be the case. Amazon bouncing off the 50 moving average, also coinciding with a good support level right there. PayPal, right, which fintech moves all as one, bouncing off the 50 moving average. So all of fintech was roaring today. Remember, they moved some of these groups like semis and fintech and stuff move as a group, right? Even Disney, I'll throw that in there for the heck of it. Again, bouncing off its 200 and its 50 as the 50 crosses the 200 on the daily, right? Then you got Tesla here. Now, Tesla's a different story. Tesla's the laggard of the group here. It's coming down, a couple ways to look at this, to this anchored VWAP here, which is where the bottom was in this October drop it had. And again, it revisited 1, 2, 3, 4 times, and it's bounced every time. Okay, so it held again. And again, another way to look at this is a falling wedge breakout right here and retest. Okay, that's the weekly, and it's retesting. Can it hold the retest? That's what we got to find out. It had an okay day today compared to everything else, not that good, but compared to what it's been doing the last few days, pretty good. Now you look at this, obviously broke prior day's high, broke that trend line right there, which goes back quite a ways. Got that 4-hour fair value gap above it between 243 and 240, looks like 5 right there, which can be a draw on it, which can also be where you should see a rejection down. If it slices right through it, that means there's a lot of call volume coming in. But you should see a rejection down, maybe a sudden lower high right there, and then continue to move up. And if it does reject and get the reaction we want to off the 4-hour fair value gap, it should come down probably, test that descending trend line again, turn it back into support, and then ricochet off from there or bounce from there and move up. So we'll see how that goes. Again, this is the laggard of the Mag 7. Remember, it was for weeks the powerhouse. Now it's going back into the laggard group for now. So we'll see if that continues to move up or not. Again, when it comes to earnings, we do finally start to have some earnings. These are smaller ones. If you're into this group, and I can't say the sector because I know it gets censored, but Tilray, you know what sector it's in. A lot of these are getting a lot of attention right now. Pay attention to that one. And again, I like to look at the grocery stores like your Walmarts, your Targets, your Albertsons, because I want to hear what they got to say about the consumer and what they're seeing from us. And when it comes to any kind of economic data, I mean, you got the red book year over year tomorrow. I don't really see anything that should really dissuade the markets or anything. Again, remember, it's Thursday and Friday are your huge days that you'll absolutely have economic data coming out. I don't, if I remember correctly, remember anything on Wednesday that should really affect this. But, you know, we'll see. Today was just that perfect bounce day off all these moving averages for the big boys, as I showed you. IWM, perfect bounce point. You know, and of course, what happens? Shorts have to cover, right? They're sitting there looking at their shorts around their ankles going, oh my God, I'm finna get bent over here, right? And that's what happens. And so when you, especially when you see Nvidia starts to just roll like that, man, if you're short that area, you got to be careful, right? Because you know how they run like this. And as long as the dollar and yields, if they, continue to go down, especially if the dollar goes to 100, that's going to be good for earnings for these companies. And if the market is worried about them not doing the rate cuts in March, which I think we all know they're not, but again, that's the market pricing something in, then where are they going to really start rotating more into? Probably into the large caps for sure, because that's a safe bet. They have all the cash, as I showed you, their earnings, and if their earnings are bad, you can guarantee all the other earnings when small caps and mid caps are going to be terrible. But, again, they're the safer place to go. Does that mean IWM isn't going to move up? I believe IWM should absolutely, the long thing stays the way it's going, should continue to move up. Is it going to move up as fast as it was when it bounced off that low down there? What was it, 167 or what it was? I don't think it's going to go that fast. That was parabolic move up, right, for those small caps. So now it's digesting it. What I wanted to do is start, coming down, set support levels, hit that September high. Now that becomes a support, continue to move up. I've been talking about that for weeks, right? And so that's what I would like to see. That'd be more for a healthier move. And you can see I don't like the parabolic moves unless I'm in some short trade. But if I'm looking at something for 2024 or 6 months out of the year, I want support level set, stair stepping. Let's just stair step it up. Okay, that's what I want to see. So yes, and again, there's other I'll say areas where they just haven't caught up to the market yet, right? So you'll probably see people shifting in that. The one thing people are just cautious on right now was the fact that it's everybody's worried about, is there going to be a recession in the first quarter, or maybe the first or second quarter? That's what everybody's looking at, because the industrial stuff sucks, the manufacturing stuff sucks. It really does, right? So people are kind of like, I don't know, we'll see. And again, the Fed's only had 2 soft landings out of their whole existence, right? So people have a reason to still be kind of cautious, especially after this gigantic move up so fast. Right, and stocks just don't go straight up. They go up, down, up. Yep, that's the way it is. It's just that simple. So, anyway, again, we'll take it one level at a time. We're not gonna get too up and down. I enjoy. It's one of those days. I say, look at your portfolio. Right, enjoy looking at it. We'll see if this momentum continues tomorrow or not. Because again, we've seen this run up before into CPI. We've seen it many times, right, or a run down into CPI, whichever. And then you get CPI and you may go in opposite direction. So, again, we'll see the numbers as they continue to come down on CPI are going to get tougher and tougher to hit, right? And so that's the whole other thing. Plus, you got Fed presidents running out there, running their mouth. They were doing that today as well. And so, we'll get to see. I guarantee you, I'd be shocked if any of them say, yeah, we're cutting rates in March, right? May, I think one of them said today, third quarter, right? And so, again, we'll see how the market wants to price that in. Wink, wink. So anyway, hope you got something out of it, guys. Hit that like and subscribe button if you did. Appreciate all you guys who watch and share the videos as always. Appreciate all the members who support the channel even more. And I'll see you guys tomorrow.